Hello, everyone, and welcome to TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options, and I'll be facilitating this session tonight with Rob Roy. As always, we need to go over some important housekeeping details about the session, and then I'll introduce Rob. First and foremost, this is our live disclosure disclaimer agreement. If you've attended any of our live sessions previously, and you've seen this, the main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website if you'd like to read it in full detail there. Certainly feel free to take a screenshot of it if you like, but that's the main point to take away. All right, so for this session, we are live streaming to multiple different platforms per usual. So Rob goes through his general presentation. We'll find some case study considerations for the evening, and with the time remaining, we'll take a combination of questions from all of the platforms that we are live streaming to. So keep in mind that Q&A portion is limited, and we're going to get through as many questions as we can, again, from all of the different platforms. So if we don't get to your question, just know it has nothing to do with the validity. We just only have so much time. With that, we are only going to take questions through the written form. So at any point, please feel encouraged to write your question into the Q&A, and we may or may not be able to get to it at the end. Lastly, for our Zoom audience, for any support-related queries, I can handle in that window. And of course, for any interaction amongst other attendees, please feel encouraged to use the chat window. Just make note that by default, it goes to host and panelists. So if you would like everyone on the webinar to see your message, be sure to change that to at the bottom to everyone instead of just host and panelists. Well, we noted on Thursday night in Insiders, wondering if the PPI was going to be too much for the market to handle, especially on top of the CPI report. And today just kind of seemed to be a fall through to the downside. So interested to hear Rob's thoughts on if we can recover from that. And of course, excited to interact with you all. So thank you for joining us for this live session. At this moment in time, I'll introduce who we're all here for, the man of the hour, and that's Rob Roy.
All right, buddy, welcome to this week's TradeFinder Live. Welcome to everybody joining from the various social media platforms. Apologize for starting a couple minutes late. Had some electrical issues here. Lost the cool wireless mic, so we're back old school here with the wired desk mic, and the overhead light blew out as well. So we're doing with the recording lights, supplemental lights. So hopefully you can see me okay. If you care. I mean, it doesn't really matter. That's the least of our worries. So anyway, we are here, and thanks for joining us. As Zach mentioned, we will talk about the markets, not just our market, but the international markets as well. And we'll review those. I've got something interesting to show you tonight of our trade alerts that we send out to our subscribers at EWOtrader.com. And then we'll review the case study considerations from previous TradeFinder, see if we can find one tonight. And Zach's already gone through the Q&A. So with that, let's go ahead and get to look at the chart. And here's the move to the downside. Our thumbnail for our weekend update was, did the CPI/PPI kill the rally? And we got a lot of comments along the lines of thoughts, yes or no, one way or the other. The market definitely shook off the PPI on Tuesday, but on Thursday, when the PPI was a little bit higher, so you've got a concern at the wholesale level because those prices have to get passed on to the retail level, which means us, the consumers, are the ones footing the bill. So that means higher prices are likely to continue. And we've pretty much gone down since then. We had a little bit of reprieve moving into the close on Friday, but we had a holiday weekend. As you know, markets were closed yesterday. And so then we opened today and just pretty much traded to the downside, closing, as you can see, on the low of the day. And if there's anything that's positive from that, normally when you close on the low of the day, it's been my experience that at least for a short amount of time, perhaps those that wanted to sell sold. The buyers just stepped away, let the sellers have it. Now, when you look at the volume, if we were going to say, hey, this is the bottom of the selling, I would have liked to have seen a little more volume, indicating that everybody that wanted to sell has sold. But we're just a hair below average volume, which to me means that maybe we aren't done with this selling. We did break the 50-day moving average. If you look at the 10-day moving average, we're a little separated from the 10-day moving average there. So we're a tiny bit oversold. The futures are up 7 points right now. So maybe we go to correct that on the open in the morning and then see how things play out in the afternoon, noting that anything could happen in the afternoon. Now, one thing that I mentioned in the weekend market update was could this big zigzag become disqualified? Well, it could, but does this mean the end of it, what we've had so far? Not at all. You can see the B wave or the B correction to the C wave went right to the 61.8% fib level. And then we ran into some sideways consolidation. All that made sense. We had a little bit of a triangle, which we noted, and we have broken to the downside out of the triangle. Now, the one thing that I wanted to bring up for those of you that are bullish, I usually try to give arguments either way so that we're prepared, is the fact, I'll take the moving averages off, we're a tiny bit oversold, but could we have a complex C wave? In other words, within this C wave, do we have another zigzag? And now we do have one. We've passed the 38.2% fib level. So that means we have potentially a qualified zigzag here in the C wave. Now, if we were to turn now, then you would look for an extension to that 61.8% level. But if we come down a little bit further, then perhaps this 100% extension on this complex C wave winds up somewhere within this tap box. And as you know, the big zigzag pattern has its C wave extension right smack in the middle there. So it's possible that we could add 3 potential Elliott wave patterns, 2 zigzags, and the 5-wave impulse pattern, all giving us a potential wave 5 target in the same area there under 440, somewhere around 435 or so. But we have to turn first. And so that means that the selling has to end and we turn and move back to the upside. But all is not lost if you are bullish. Now, tomorrow we have the Fed minutes. Is it all eyes on the Fed minutes? It kind of was, but is it now? I don't know. Maybe there'll be some interest to see if some are thinking 50 basis points now after the CPI and the PPI when 25 was based in. I also shared in the weekend update that 50 basis points of rate cuts that was being priced into the Fed fund futures before the end of this year is now pushed to the beginning of next year. Looks like that's what they're pricing in now. It's there's not a huge majority now. There's several different places that have percentages, so that could change, maybe even based off of the Fed minutes tomorrow. Who knows? But I don't know if tomorrow's Fed minutes are going to be as substantial as normal. And part of that is because we hear from the Fed governors all the time. They're always giving speeches, right? It seems like every day, if you look at an economic calendar, some Fed governor is talking. So, they say what they're thinking. And I don't know that there's many surprises, I guess is what I'm trying to say, to come out of the Fed meeting minutes. So maybe it moves the market. If it does, I think it might be short-lived. So we had a break from the downside out of this triangle. The bottom line here is we're a little bit oversold. Now, could we continue lower? We could. In fact, I'd like to see that. I would like to see us continue lower to the 61.8% corrective level and then turn. And then I think we have an extremely high percentage chance of continuing with the rally. But that's a ways from now. So we'll see how this plays out. The fly in the ointment of my ideal scenario is that we're already a little oversold. Could we get slightly more oversold? We could, and go down to that 61.8% level. That would really be stretching it. But are we already too far oversold to do that? That's the alternative argument to my plan. Now, this is concerning me here. You can see that we've had a relabeling of the 5-wave pattern here on the 10-year. And that's because if you remember, the wave 5 ended here. You're supposed to go back to the previous 4. We did. And now we've gone above that. So the Elliott wave algorithm then tries to say, okay, the 5-wave pattern to the downside did what was supposed to happen. The retracement back to the previous 4, the corrective move back to the previous 4 has happened. Now what's the likely thing to happen? And the algorithm is saying, we're in that corrective pattern. We don't know yet. So this is where you kind of, okay, wait until there's a definitive pattern. To me, it seems fairly clear that that's an impulse. It was an impulse back to the previous 4. Is that it? Are we going to continue to run? Did we back up here and make a zigzag higher? But if you've been watching any of my stuff lately over the last few weeks, I mentioned that as long as we stayed in this trading range on rates, I thought the market could handle it. I didn't want to see starting to move outside this trading range. And that's where it gets concerning. And that's exactly what happened today. So that's worrisome to me. And apparently based on the market action, it's worrisome to others as well. So if we get follow through tomorrow, I think that means that the path is clear to go up to 43, test the highs and see what happens. That isn't positive for the market at all. And it's not going to be positive for those potential upward zigzags. So we need to turn and come back down on rates rather quickly. You can see we are a little bit above the 10-day moving average. Maybe get a little reprieve in the morning on both the markets and the rates, and then we see what happens from there. The dollar is hanging in there okay. Now we are trending higher. And again, just like with the 10-year, we should go back to this previous 4. That's what should happen. And then we look and we can see that we have this wave 5 down here. That's the trading range that I wanted the dollar to stay in. So interest rates have broken out of their range that I thought was the Goldilocks scenario. Is the dollar going to do the same? If you get a double whammy, you get the dollar above that wave 4 and rising, and you have rates continuing to rise, none of that is positive, especially for the NASDAQ, for the Qs, and thinking that maybe the Qs were going to lead us out of this, that could be a fly in the ointment there. That could turn that game around. So we have to be, really careful. I still say that, if we turn and go to the upside, the Qs will be the leader. But do we have more downside to come now?
Hey,
I think
Rob,
that remains in doubt.
Sorry to interrupt you there. I know we're using the old school mic tonight with the technical issues. If you don't mind just moving it a little bit closer, just a bit of an echo.
An echo?
It's not too bad. I just a little bit closer should be perfect.
Okay, there it is. Is that better?
Yep, that's a lot better. Thanks.
Okay. Yeah, we'll have to figure out the electronics later. Figure out what happened. There's a trading range for the dollar, and what I was saying that as long as we stay within this trading range, I think we're okay. But if we get the dollar breaking above this and we get the interest rates breaking higher, then we have problems. Looking at the VIX, look, we got a little bit of traction there. Exact same scenario here is the previous wave 4 is there. I think we can handle that. It gives us a little bit of room for the VIX to come back down, which is what occurs when the market goes to the upside. So looking at the 10-day moving average, we're a little bit overbought here, or a little bit above the 10-day moving average on the VIX, and perhaps a little bit of a move down, or maybe we stretch everything tomorrow. I just think tomorrow is going to be a really interesting day to watch. Fascinating, if you will. We're in danger here of everything breaking out of the Goldilocks range into the danger Will Robinson range, and we'll have to see how that plays out. Looking at Bitcoin, and then we'll go into some of the other international markets, or our markets and the international markets. But Bitcoin, I think, is really impressive by how it's holding in there. I was impressed that we held right here at the 10-day moving average, and then moved up to 24,000. We broke above it, and over the weekend talked about testing the 24,000 level would be conducive to potentially moving higher, and that's exactly what's occurring. And so can we move higher from here? We'll find out. But the price action going back to this breakout move back here on January 12th has been quite impressive to the upside. In fact, if you're looking at that and saying, hey, is that a zigzag? And I believe it is qualified. Now, the problem is that 61.8% isn't that far away, and we're kind of already there. And that could be adding to some of this consolidation. But if we move to the 100% extension, guess where that takes us on Bitcoin? 28,000. What have we been talking about with these 4,000 moves? That if we can break above 24 and hold, shouldn't be long before we go to 28. So all that makes sense. Oh man, start to get used to the wireless mic. You have less stuff on your desk to go around. So let's look at the diamonds. And remember, that's where we had the triangle pattern, and we were going to look to see if we were going to break out of the triangle pattern. And I think the answer to that is a resounding yes. And you can see, let's take the Elliott wave pattern off. Remember, we noted that having a triangle supersedes the Elliott wave pattern. Some comments on YouTube on enjoying that piece of information, and some confirming, yes, that's what Elliott said. So it's interesting to interact with Elliott wave fans on YouTube or any of the social media platforms. If you haven't visited our channel, if you're watching on YouTube, please go to Elliott wave options on YouTube and join in. There's really a lot of well thought out comments and questions. There's some silly ones too, but that's what happens, right? But there's some really interesting ones. So looking at this triangle, that's the definitive break. We tried to break out to the upside a couple times, and I mentioned that there was just no follow through, and you couldn't count any of that as a breakout. That's what a breakout looks like. But now the question becomes, is there follow through tomorrow? We're down below the 10, 30, and 50. We're about to have a negative cross of the 10, 30. It's dicey here with the fact that all of this Goldilocks setup within a couple of trading days, maybe by the time we talk to Thursday night, we'll have some information. Could all be really on thin ice if it isn't already. And then we have to start being concerned with maybe there's more downside to come. We're not there yet, but we could be there within a couple of days, or this could just be a normal correction and we resume back to the upside, because we know the market moves in impulses and corrections. So is this an impulse to the downside, or is this a corrective move to the downside? I think that's interesting to find out. So let's take a look at the Qs. I'm sure everybody's interested in looking at those, since we had talked about, again, those being the leader. And we had that doji that occurred on Friday, talked about that in the afternoon, the weekend update as well, to see what that meant for today. And clearly you could see it meant to the downside. But we still have a very qualified 5-wave pattern. Could we be in the wave 4? We could just be forming the wave 4 here. So that would tie in, the Qs would tie in with those upward zigzags on the SPY. So I just want everybody to know that if you're bullish, all is not lost. If you are bullish, time to be really cautious though, because things could fall apart. They haven't yet, but they could. So this is where you want to, just exercise caution, maybe take gains a little quicker, things along those lines that normally occur when moves be coming down. And this is a concern here, I think, on the IWM. We take a look at that. What's the significance there? Everybody should know by now. We closed below 190 today. So that break of 190, where we broke out of that trading range between 170 and 190, has been given up. Now we're right back into that range with this drop below 190. But can it have follow through tomorrow? Or was this a one-day phenomenon and then we jump right back above 190 tomorrow? So you can see that in the next couple of days or tomorrow means a lot. Two different scenarios here. So here's the triangle that we have on the IWM. And so we broke to the downside there, but our longtime subscribers know that one day doesn't mean a thing. There's so many head fakes that occur in the markets. One day doesn't, you have to have a follow through, a confirmation day. So can we close lower tomorrow? Or do we close lower tomorrow? I should say, if we do, then that is a significant break of that 190 level back into the trading range. If we turn and get back above 190, then today is no harm, no foul. It really doesn't mean a thing. So that's the importance of follow through, because this could just simply be a head fake to get people to start to panic. Whether or not you believe in things getting set up. I used to talk in my seminars about the comparisons of when you have analysts doing upgrades and downgrades, and often when they downgrade a stock, it goes down that day and then it turns and goes back up. Are they just downgrading it so that they can buy more? That question always comes up, but the market eventually gives us the answers on what's going on. So whether or not just know that head fakes occur and don't buy into them. Stay with the rules, and then you don't have to worry about it on why did it occur or any of those type of scenarios. All right, so let's look at Australia and see what the Aussie market looks like. And we didn't hold that 24 level that we needed to hold, and we talked about this, that if we don't hold 24, then it's what kind of the one price point stair step that occurs here on the EWA. So 23 comes next, and then if we can't hold 23, then we're all the way back to the previous wave 4 at 22. Very well could happen. So is that wave 5 over? Could be. So are we on our truck back down to the previous 4, which would bring us all the way down to 22? That could happen. It seems like we're in no man's land here. We're a tiny bit oversold. We broke the 50-day moving average. Really seems like the EWA wants to come back to 23, and then we'll go from there and see if we can hold that and turn back to the upside. But perhaps we have a zigzag pattern here where we could go higher. That would make a lot of sense. I just feel like, I don't know if we hold here. I think we need to come down to 23, and if we come down to 23, then we can figure it out. That looks like decent follow through on the break of 24, so it does seem like 23 is in the cards there. So let's take a look at Canada with the EWC, and same scenario here where we talked about needing to hold. And for the EWC, it was 35 that needed to hold. Almost the same chart here. Breaking back down. Are we coming back to the previous 4? And we have the different levels here. Not quite as definitive on 34, but 33 for sure. And if we don't hold 33, then where are we going? Back to the previous 4 at 32. So again, the stair steps to the downside. Each one of these could find a little bit of support with a short-term bounce. But as you've all seen, when the market gets going to the downside, sometimes it can go down rather quickly. But areas that need to hold are right here, right on the outskirts, and need to happen very quickly. Let's take a look at the INDA. For India, we're really trying to hold 40, but today is dicey with that close below it. And does that mean that we're headed down to 39? Probably. That seems like where we're headed on the INDA. And then if we're going to go down there, we're probably just going to come all the way down and hit this target on the wave 5 below it. So again, tomorrow matters. Do we follow through? Last time we tried to break it, we got a little reprieve and bounced back up, but here we are testing it again. Tiny bit oversold, but not significantly so. Easily could go a little bit lower on the INDA tomorrow. Let's take a look at Germany, which has been flexing its muscles literally by some of the posts on YouTube, and holding in there pretty well. A little bit of a dent in the armor today with a little bit of a break, but well above the 50-day moving average. The issue is we did break below 28, which needed to hold. So here we go again. We closed above it on Friday. Got to get back above it. So can we get back above that and try to get over that 28 level without follow through to the downside? Because this is really, really dicey for the EWG. This was vertical, and there's gaps everywhere. And of course, you get gaps on the international ETFs. We know that they happen more than in just US only securities, but we could come all the way back down to 25 here in a heartbeat because of that vertical move. Very imperative on the EWG that we get back above 28. Otherwise, yeah, that could be a quick downward short there, back down to the 25 area. And I think that's really in danger of occurring. So we've noted on multiple international markets, including our own here, that tomorrow means a lot as far as, was today an aberration and we return and go move back to the upside, or do we get follow through to the downside? Will we find out anything before the Fed minutes are released tomorrow? The market may just tread water until then. So lots to think about and talk about with where we are. But the positive thing is, within a day or two, whether or not we're getting follow through to the downside, or whether or not we're holding and starting to turn back to the upside, there's a really good tradable move coming from a directional standpoint, whether it's the extension on those zigzag patterns or recovery back to all those previous fours. Both of those are very tradable. One's to the upside, obviously one's to the downside, but you like it when you have at least some sort of a discernible trend for, even if it's just a couple weeks of time frame, to where you can make some directional trades. And that, I believe, is where we're headed here on the next day or two. Surely by the end of the week, we'll know, and probably by Thursday night's insiders, as I mentioned, we'll find out and know. I did want to share with you, I get this question all the time, and in our volatility portfolio, we do mostly strangles. And that's kind of a unique strategy that I came up with. To my knowledge, nobody else is doing it that way, but I don't know for sure. So people have cautioned, don't say proprietary if you don't know for sure. But I've never heard of anybody else talking about creating a strangle instead of going one strike out of the money, going down to the 25 to 30 delta, which is the sweet spot on the delta curve. You get the fastest acceleration, and then when the stock breaks the other way, you lose money slower. So you gain money faster, lose money slower, the way we set them up, than you do in a traditional strangle or a straddle. I know we've had some comments on social media about straddles, and it's one option strategy I was taught in business school in college. That was it. That was the only one. The only option strategy talked about was a straddle. One of the hardest ones to make money at, in my opinion, but that's how it goes. So on DVN, we set up, we have this triangle here. So we're setting that up. And then on the 17th, we sent out an adjustment, which was, and I'm going to show you the chart of DVN, the current chart. We sent out an adjustment to take off the put side because we had a pretty significant move lower, as you can see. So you take off one side once you get to this point. And here's the point that I wanted to share with you, is you get to the point where we're at break even. Even if this call option goes to zero, we still, less than 1%. So it's a break even trade. That's when you can go ahead and take one leg off. Now, when we take a look at the chart, are we a little bit oversold here? And we are. See, there's the 10-day moving average. And here's where we are. We had a little bit of a reprieve here, but we did this on Friday. So a little bit of move back to the upside is not enough to really be meaningful. But if we do come back up towards this 10-day moving average, that call will regain value. And that's where the gain will come from in the trade, is because we're out of the put already. We sold the put for $4.80. So anything that the call can gather now to the upside is all gain. So there's no risk left in the position. Worst we can do is break even. And we have the potential to make money if we get a bounce back to the upside in DVN. That's a really good adjustment for strangles. And I know that the temptation is to get in a little faster when you start to see a breakout. Oh, it's breaking to the downside. Let me take the calls off. Well, see, notice we did the opposite here. We took the puts off, and now we're holding the calls. Because if you take the calls off and you hold the puts, what if that's the end of the downward move and then you bounce back to the upside? Well, you already took the calls off. They probably had very little value in them, some, but very little. And now you're bouncing back to the upside. So the puts are losing this value because they moved in the money and you screwed up the trade. And so that happens a lot. So I wanted to share that with you as far as a legitimate way to take one side off. So we kind of call this the lottery ticket now. We're at break even, so there's no risk. If we do bounce back to the upside, there's no guarantee that'll happen. But if we do, and the call gains value with no risk and only potential upside, that's a good position to be in with these strangles. So if it didn't break enough to generate enough gain to go ahead and close the position out altogether, that's the thought process there. So if we're wrong and it continues lower, it's okay. That's the scenario that occurred. And, perhaps we would have done better had we left the puts on. but we're down here at a potential point of support. We're pretty far oversold from the 10-day moving average. It was quite a vertical move. We've got a couple gaps that need to be filled. There's a lot of argument for at least a short-term bounce, even if it's not any sort of, not calling for a sustained upward move, but there's some sort of a bounce there. I think makes sense. And so that's one of the things I wanted to share with you on adjusting a strangle. All right, so let's take a look at previous case study considerations. We're going to go ahead and close this one out tonight. We had left it open. This is the oldest one that we had on Monster, and we said as long as we stayed above this level here at 100, we would give it a try. And we stayed above 100 for all this time. We were starting to make a move to the upside. Let's see, we had a doji there on Friday. Could that get us the break to move higher? You can see in the last week closing right up here. Looked like maybe we're going to get a breakout, and all that kind of seems to have gone by the wayside. So we've lost some time value in this, really nothing else. But we had a chance at the breakout. It doesn't look like it wants to occur. It looks like it wants to find its way back into that trading range. So rather than waste any more time, we're just going to go ahead and we'll give up the time decay loss on that and forget that and move on. And then 2 weeks ago, we looked at Google, which was here, and then it moved to the downside and talked about how sometimes it's better to be lucky than good. And so we broke lower, and on this zigzag pattern, we came down to right at the 61% level. We held there for a week, as you can see. So a potential C wave extension up to the 100% level, but then we have broken this today. So breaking that level there means that we have to watch tomorrow. This could be a disqualified trade. We could break too far on the V wave correction that it disqualifies the upward zigzag. So we have to watch that and see if that's what happens. Or can we bounce back to the upside? It's really curious to see how Google handled all the selling today because it had been hit so hard already. Would it hang in there? Well, it had up until today, and then today it just kind of gave up the ghost. We also looked at Apple 2 weeks ago, and we have this area here, hold about 150, that we really wanted to see that hold, especially since the wave 5 ended. It went back to the previous 4. It did everything it was supposed to do. Same thing here. This is an impulse move. Can we continue this impulse move? Well, we consolidated right at 150 for a long time, but same thing here. We have a break of 150. Does that follow through to the downside tomorrow? If so, then I think you walk away from that one too, and then we wait and see what a better entry is. Could this just be forming a zigzag pattern higher? It could be. It's not there yet because it's only at a 27% correction level. So, you know, coming down, even if it were to come down into this 145 or 140 area, and then the potential to move back to the upside from there. But right now, we just have to see what happens tomorrow. Both of those in danger of becoming patterns that we're not interested in anymore, based on what happens tomorrow. If there's downside follow through tomorrow, we bounce and it's a whole different scenario. And then MPWR that we looked at last week was started off really well, and then ugly day today, not so good on Friday either. So the question becomes here, you can see that we're still in this trading range channel, if you will, to the upside here. We're in the bottom end of it. And if you put on the 10-day moving average, we got a little bit oversold, but not much. And we broke below that 10-day moving average today. We still were holding above it on Friday, but broke below it today, and we're in danger of breaking out of this upward trend channel here. So once again, tomorrow, very interesting on this. We've come down and we pretty much filled that gap. So the high was 479.59. The low was 480.06. So 50 cents away from filling the gap. And maybe that's all we're trying to do here is come down and fill the gap, and it turns and heads back to the upside. We'll be watching that over the next couple of trading days as well. But that one's also in a little bit of danger. So we want to see, are we turning things around here or not? Or are we looking for more downside to come. That's going to be really interesting. I'm looking at the headline up there: huge winter storm churns across northern U.S. threatening record snowfall. Well, that could be something different for the energy stocks, right? I mean, that could be a bounce higher for some of them, maybe natural gas for a short term at least. All right, Zach, got a couple extra minutes, but that's everything I wanted to share. So let's go ahead and take a few questions.
Absolutely. Yeah, thanks for that presentation, Rob. And just to further what you were talking about there on that news, it could very likely impact those energy stocks and in that sector. I know New Hampshire set record lows for I think it was negative 108 or something crazy like that from the wind chill factor. And
thank you.
Yeah, no, I'd like to stay far away from that. So we'll have to see what impact that'll have if we have another one of those cold surges. All right, we'll start out here with a question from Jordan. Good one to start out with. Looking for Rob's insight into NVIDIA before earnings. Is there a special way he trades before a volatile earnings report? Thanks.
Well, the best way is to put on one of the strangles, but let's take a look at where the ADX is way too high, so you can't do that. NVIDIA has been looking very strong. I expect a good earnings report. The question is going to be, where's their guidance? That's what's hurting everybody. And we talked about this last quarter, where that was going to be the issue for this quarter. And I think that's starting to play out now, it's the guidance looking forward that's been getting the stocks beat up on earnings. The numbers, just the headline numbers, haven't been bad at all. Better than expected, at least on my part. But the guidance is where I thought it would be. And, you know, when you're looking forward, that's where everybody wants to know. And that's been the issue. So as far as NVIDIA, I've always had kind of just, you can look back and find out that it has a decent percentage of accuracy. If a stock is going down into earnings, it tends to turn to the upside following earnings. In other words, you don't normally have a stock, nothing's 100%, everything has exceptions. But usually, if a stock is moving down into its earnings report, then it turns and runs to the upside on earnings. But if you have a stock that's doing the opposite, if you have a stock that's rallying into its earnings report, then it's likely to reverse. Even if it's good numbers, it's kind of a buy the rumor, sell the news standpoint when you get to that point. So looking at NVIDIA in front of their earnings report, coming down here towards 200 to test 200, it's been a pretty big move down from the high of 230 all the way back down here to almost 200. So yeah, I guess we'll find out tomorrow, right? But at this point in time, I think you just kind of wait and see. I love it when you have a nice triangle with a low ADX set up into earnings, but this ADX is so high already. The issue here, which is going to make this kind of a speculative trade, is if you wanted to go long here into their earnings report, if it doesn't turn to the upside, if it doesn't have a good outlook moving forward, then it probably comes down to 180 rather quickly. I think it would kind of blow through the 50-day moving average and get down to this support area here. Maybe it could hold there around 190 or 185 around the 50-day moving average. There's a little bit of support resistance from August, but not a whole lot. I think there's danger of 180, but it could also turn and bounce. I think the whole market's going to be watching this more than it's going to be watching the Fed minutes. So it was good on you for asking about NVIDIA. It has been a market leader. You can see it took off to the upside. It was leading us higher. Now the question is it leading us lower now, or is this just some profit taking into earnings? Which so far, I think that's likely what it is. You look at the volume, and other than a couple above average volume days, been rather below average volume on the selling. So that tells you there's not heavy volume selling here. The institutions are going to ride it out unless it's a horrible earnings report. So this is just profit taking coming into the earnings, which means I think that it leaves at least a possibility that we could hold 200 and bounce back to the upside. But once again, if we don't hold 200, then it gets pretty ugly. Not quite Katie bar the door, Zach. It's ugly. I know you're listening intently on this as well. So
I am. Yeah. No, there's
favorite
definitely some
stock.
interest behind that question. And I got a little sidetracked when we started talking about the cold surge, and per usual, our subscribers are on it tonight. Is there a case study consideration for this week? We're talking about closing out Monster. But did we decide on one for this week? A new one?
Yeah. We'll do that now. I think we want to stay in the consolidating stock area. As you can see, there's tons of them, even though we started to have a little bit of a breakdown today. And I know there's one that looks really good. So I'm going to show you this. One of our subscribers saw this too and put a position on it. And this is a really good pattern. It was actually funny enough, my neighbor's in the Air Force and likes the airline stocks, obviously. And he had just put up a position on Love. And so we talked about this triangle pattern. And be careful if it breaks to the downside because that's a pretty nicely formed triangle. So here's the low ADX. That's what I like for the triangles. This is my ideal setup where you have a really nice triangle pattern and then you have the low ADX. And this is kind of one where you're like, because was going to send this out as an alert. You don't want to do it on Friday because then you give up basically 4 days of time value, Friday, Saturday, Sunday, Monday. So you're behind the 8 ball already. So you wait till Tuesday when you have a holiday weekend, and we get this today with all the selling. And it's difficult to find an entry with the volatility moving to the upside. If we get any sort of reprieve tomorrow, any sort of a bounce, we'll go ahead with a strangle. If we're starting to get follow through to the downside, then we will go through and trade that one to the downside. So I know this isn't our normal modus operandi, but I just kind of want to see how many people are watching and really paying attention. So that's going to be the key here, is if we bounce to the upside tomorrow, you do a strangle. If it follows through to the downside, we buy puts. And we're looking at a potential, so 32 to 40, it's 8 points, so 6 points. So our target price is going to be down around 29 or 30 is where we will. So that this stock could come down that far, somewhere in this range, right in through here. So let's make this one an if or on Love and see how closely you watch it. Just curious as to everybody's motives for being here and watching. So everybody got it. If it bounces to the upside tomorrow, we do a strangle. If it breaks and follows through to the downside, we buy puts. So I think that's kind of something a little bit different that we haven't done for our case study considerations, but it gives you something to watch and say which way would we go. And you could put on a strangle and just maybe give it a little better, little higher delta to the downside for the breakout already. But I've tried that before and it usually doesn't work out. So I'd rather do it this way. We bounce back to the upside, traditional strangle, trades lower, puts. So let's see how it plays out. Be interesting to see. All right, Zach, back to the questions.
Thanks, Rob. Yeah, I see we have a hand up here from our subscriber, Marek. We unfortunately don't have time for voice questions in this session. Our Q&A portion is quite limited for this session. And as I noted, we are taking a combination of questions from all of the platforms we're live streaming to. So if you still have a voice question on Thursday, please feel encouraged to put that hand back up and we would love to hear from you. Or if you want to maybe drop your question in the Q&A window, we'll try to get to it. But again, these questions are all selected at random and we only have limited time for this session. So we'll go over to Boyle. There's a lot of requests for Boyle. about the ETF for UNG going back
Yep,
to our energy
so
sector combo.
do the ultras. So we're gonna juice it with some futures. That's what happens with these ultra stocks. And I thought natural gas was trying to form a bottom, and it did seem that way, and that didn't work out so well today with this break to the downside out of natural gas. So where this one's a tough one for me. I mean, we may get a short-term bounce because of this winter storm, but the break here is not good. So here's one positive thing, but you got to be careful for a reverse split at any moment when we get down here. And this is what happens to these. I've talked about this before, so I just want to caution everyone from trading these ultras, because you get the double whammy on time decay from the futures and from the options. And these things are designed to whittle away. When you make money on the ultras is when you catch one and you get the move right. But it's not a security that you want to put on and wait for a while. You need to get it right pretty quickly, because they always go down. And these things always erode to zero, and then they reverse split and they start over. And that's how it plays out time after time after time. All these ultra things are set up the same way. So it's fun if you get the timing right and you get the acceleration, the leverage because of the futures backing it. But if you don't get it right, then time decay chews you up and spits you out in a real big hurry. So I'd say be careful. But looking at this, we were consolidating right at the 100% level. All that looked great. It looks great on UNG as well, but then we broke lower. So we broke below. Just bring up UNG as well. Breaking below 8 is not ideal. We were bouncing back and forth, and so that break there with a bit of follow through today is concerning, and we may go ahead and exit this if we don't turn back around tomorrow, meaning that perhaps we get a short-term bounce out of that storm for natural gas. It should come back down and at least test 8 now, breaking below it. We're a tiny bit oversold, but not a lot. Surprises me a lot with this, that none of this vertical move is going to get retraced, at least not right now. That surprises me. That usually happens. It will happen at some time, but it may be way down the road now. It may be months away before that turns and starts to go back. So a little surprising here on natural gas to see that 8 level not hold. So tomorrow will be key if we can get a bounce. If not, then who knows where the bottom could be here at this point in time. I thought we were finding it and we were building a nice base. Not the case, at least not yet.
Thanks, Rob. Next up, we'll go over to Tesla.
What a shocker.
Yeah, I think you might be able to work that into your general market analysis. With
probably should just do that. It's one of the regular stocks. And we did talk about this in the weekend update as well. So here was the key. And I posed the question on, is that it for Tesla? Because we're right here there's all kinds of things going on here. As you can see, we're at right between a 50 and 61.8% wave 4 correction. We got some resistance here at the 220 level. We're still in a well-formed 5-wave pattern to the downside and breaking below the 10-day moving average today. Be looking to see whether there's follow through tomorrow. No, I mean, the futures are up 9.5 now, which is meaningless, but at least they're trying for a bounce heading into tomorrow's trade. Today was pretty ugly, though, so that's not that big of a surprise, and that could be erased in a couple of minutes, as you all know, in the market. But the key here for Tesla is this was really a really important level. I was surprised that it got to 220, but it did, and you let the charts tell you what they're doing. if it could break 220, then high probability we're coming back here to test these highs. Very high probability. But it has to do that. And right now it looks like perhaps it's rolling over at a point where it's not shocking because there's so much resistance here with the wave 4, the resistance from the pattern, all the things going on with Tesla, the 5-wave, well-formed 5-wave pattern to the downside. Again, what happens in the next day or two? It's not crucial. I don't think that Tesla gets back above 200 tomorrow, but it needs to kind of rest in this area without giving up too much. Even coming down here, I don't think it would be awful if it came back down here to 180. There's support there. So it tests back down to 180, test that 50-day moving average, catch itself, and then take a run back to the upside, maybe build a zigzag higher. I think that's still well within the possibilities. So we closed at 197. I wouldn't be shocked with the move down to 180. What you don't want is a break of 180. Then Zach, that's Katie bar the door. So if it can't hold 180, then it's watch out below on Tesla, but has to do that. And, right in this area between 180 and 220, I think is a safe zone, whether you're long or short. Break above 220, great chance we go test the highs. Break below 180, and I think we're going down. We're probably breaking those lows, which would be quite shocking. So Tesla's in a really, really interesting spot right now.
Yes, indeed. And you never know how volatile that stock may be, depending on what mood Elon wakes up in.
Yeah, well, it's okay right now. I mean, it's okay now, but 180 it has to hold.
Absolutely. All right, so we'll go over to HYG.
Okay. High yield bonds, and you can probably imagine what's been going on there. So prices going down as yields go up, and very close to this 5-wave pattern of the upside becoming disqualified now, just like we were with the 10-year on rates, and a little bit separated from the 10-day moving average. So maybe we're a little bit overbought, and this is what I didn't want to see from the bond market, is money going into it, but it could, and that's just really bad. We start to lose that. So we're in a no man's land with rates. If too much money moves into prices and pushes yields down too far, then that's money flocking away from the equities market. But if rates go too high, then that's detrimental to the equities market as well, which makes you wonder, if rates continue to the upside and the equities market sells off, where's the money going? If it's not going into the equities market or the bond market, where's it going? Is it going to be Bitcoin? That's a really legitimate question, which we're going to find out the answer here pretty soon. Some sectors are probably getting some accumulation right now as there's a rotation, because it's got to go somewhere. The money's got to go somewhere. It'll be really interesting to see where it goes if we continue with this rate with bonds and equities at the same time.
Thanks, Rob. Do we check SLV tonight?
Haven't yet, so let's do that. And we're trying to sneak back up after that breakdown, but it got a ways to go still. And it's just, to me, it's pure no man's land. We held here around 20, which is kind of where we needed to hold. But is it short-lived? Because all we did was tap the 10-day moving average on the high. I'm encouraged by holding 20 today, but we need a couple more days. So there was a lot of looking and watching today on these charts and seeing all of these things that are so, subject to going either direction, that we find out more answers tomorrow. I really think so. Follow through or reversal, day tomorrow is what we're looking for. But we got some work to do here. We got to get back above the 10-day moving average, I think. And that was a pretty significant 1030 cross there. And you would have to say the higher likelihood is that we're just catching ourselves here and we're going to start working our way back down, which is disappointing. Wanted to see a rally out of SLV. Still could happen, but we've got to do some rebuilding of the chart first before that can happen. Now, if you're looking for a downside trade, if it can't hold 20, then you got a good downside trade there. But if you're looking for the upside, I think we have to wait. We need some more backing and filling and building of energy to make another run higher, because it all got broken. 2 months of work just wiped out literally in a couple days. All this really good sideways consolidation, just boom, boom, in 2 days, got blown away.
Yeah, no, that is definitely something to take a deep breath on. I see we are at time, and as always, I'm happy to stay on and
yeah, let's do one more.
Do one more. I see we do have another hand up here from Brian. Brian, we'd love to hear your voice, but we just unfortunately don't have enough time on this session. So please feel encouraged to raise your hand again on Thursday night in the insiders meeting, and we'd love to have a conversation with you then. If your question hasn't been answered by then, we'll wrap up tonight. We looked at the 10-year. Let's go ahead and finish on the 20-year.
TBT. Okay.
Actually, a TLT.
TLT, they want to look at the other way. Okay, yeah. Well, I mean, one is rates and one's prices. So
right.
One have to know the other. So
one final comment. If you enjoyed that webinar out there, to everyone joining us for the live stream, don't forget to smash that like and subscribe button for Rob. We appreciate it. It goes a long way.
Yeah, thank you. I do appreciate that very much. And so a lot of you been doing that on YouTube. Very much appreciated there as well. So looking here with the TLT, a little more definitive here. We're at a wave 4 that was at 61.8%, very strong level, nice run, but bumped our head at the previous 3 and created a bit of a trading range here between 100 and 110. So now we're at the lower end of the range. We're oversold from the 10-day moving average. Perhaps we do get a little bit of a bounce here and reverse things a little bit, which I think is really important if we're going to have those upward zigzags play out. The bond market needs to turn, and the direction it's going is not going to be conducive to the market going to the upside, I don't think. So we need to see this turn. So, TLT, that's a good one to look at, since it's right dead on support. Maybe that's going to be the one that gives us the signal earlier than the 10-year on what's going to happen with the bond market. Can it hold here and bounce back to the upside? Yeah, good one to finish on. Thanks, everybody. As always, hope you enjoyed a great holiday weekend. Thanks for starting your week with us this evening, donating some of your valuable time. Hope you found it educational and informative, and look forward to talking to you again soon. Take care, everybody.